My name is Zach Demuth. I'm the Global Head of Hotels Research at JLL Hotels and Hospitality Group. This is my Hospitality Daily episode.
I'm Josiah McKenzie, the host of Hospitality Daily, and I'm really excited about this conversation with Zach because we touched on so much of what's going on in the world of hospitality today. Last year, 2023, was the year the industry made a full recovery in terms of RevPAR, the key revenue metric hotels track. And so the question is out there, what is next? Where are we going from here? And so this conversation gets into a lot of the trends and key themes that you need to be watching, regardless of where you are in the hospitality ecosystem. If you're an investor, if you're an operator, if you're otherwise working in the industry, you need to know what's going on a global scale. And so in this conversation, we get into what's going on in the world of investment, what key markets are opening up and presenting opportunity, the return of urban hospitality. We talk about sustainability, consumers increasingly wanting that. We talk about the role of brands and what's going on, some interesting developments on the brand front. A lot of things that we're going to dive into in this conversation. Let's get into it. Zach, I've been looking forward to talking with you about this research because, when I looked at the stats over the past year, last time we talked about research and trends, people were obsessed with that conversation, with that episode, the work that you do in leading hotels research at JLL. And so I'm thrilled that you're back again to talk about what we're seeing heading into 2024. So thanks so much for taking some time to chat with me about your latest research today.
Of course. No, thanks so much for having me. We were chatting obviously before we went live, and you said you did 300 interviews last year, and so that's incredible. I'm really thrilled and honored to be part of the continued growth. So thank you.
Well, let's talk about your most recent study. It is the Global Hotel Investment Outlook Report for 2024. In reading through it, there's so many good themes here. I get the sense, of course, it's really valuable to investors, but I feel it's valuable for people across the industry, regardless of where they're working. Do you feel that way as well?
Yeah, no, I think it's a good point. Obviously, at our core, JLL, we are a investment firm, hotels, office, industrial, et cetera. So I think we sort of lean towards the investment side of things. But as we all know, in hotels and hospitality and travel in general, it's a consumer-based industry, right? Investors are essentially buying into what consumers do or don't do. And so I think we'd be remiss if we didn't talk about the travel industry at large. So yes, our primary audience is still going to be hotel owners, investors, operators, but we really like to encompass the broadest range of the industry. And again, we are a consumer-based industry at our core.
We're going to get into some of the things that you learned in that study, but I'm always interested in research methodology. So tell us a little bit about how you approach such a comprehensive project like this.
Yeah, I mean, I think when you're talking about a full year outlook, first you have to really understand what's happened over the past year, and even particularly given everything that's happened to our industry recently, what's happened over the last 3, 4, 5 years. So, it's really a comprehensive look at the entire year. So a lot of listening, a lot of learning. Obviously, I personally attend all the major hotel conferences, both here in the US, globally. We have team members all over the world. So we kind of as the year starts winding down, compile all of our notes and come up with the top 5 or 6 themes that we all heard, both as a research team, that our investment sales teams heard, debt teams, et cetera. And so that's kind of how we start the framework. And then from there, it's about finding either unique data sources, whether it's through our partners with STR and CoStar, the airlines. Obviously, that is a core component of how guests travel. Tourism bureaus, whether it's here in the US, AHLA, USTA, internationally with the UNWTO, and sort of finding interesting sources that sort of help substantiate the themes that we're seeing. And then a lot of it, again, at our core, we are an investment firm, is talking to our clients, right? So, one of the core themes that we talk about this year is this, sort of rise in or resurgence in urban travel. And urban hotel demand, and then investor demand. So we spend a lot of time talking to our clients that are either existing investors in urban hotels, future investors in urban hotels. Why do they own a hotel in an urban environment? What's sort of the driving force for them? And then use that in our research. So, for us, it starts kind of big picture, then we take it very granular to the data, and then we try to bring it up to how does this actually impact people in the industry, whether it's investors, owners, operators, et cetera.
Well, let's talk about that as maybe a jumping off point, it sounds like cities are back in a way, and the people that you're talking to in the report you mentioned, cities like London, New York, Tokyo. There's a lot of interest here, and I wonder if from these conversations you mentioned, if you could elaborate a little bit on some of the attributes of cities that are making them more attractive to investors right now.
Yeah, I mean, I think it's no secret, right, that in early COVID, kind of the first markets to see the biggest hit were urban environments, right? Part of that was driven by travel restrictions. And then there was this, people didn't want to be in close proximity to one another for a variety of different reasons. And so that really negatively impacted urban markets like New York City, London, Tokyo, et cetera, and in favor of resorts, right? People felt that they had space. That's obviously changed quite a bit. Vaccinations have rolled out broadly. Urban markets have reopened. Tourist attractions have reopened. Business travel is coming back, maybe not in the same way as it was, pre-COVID, but people are starting to travel again for business. Slightly longer trips, maybe a little bit less frequent, but they're coming back. We're seeing this surge in group travel, right? Whether it's convention-related business, social business, but people want to be in urban environments. And then really the big thing, and this was obviously impacted severely in early COVID, was the lack of international travel. Cities, particularly gateway markets, again, London, New York, Tokyo, Paris, Los Angeles, San Francisco, rely heavily on international travel, not just for those travelers looking to stay in that market, but again, it's a gateway, right? It's very easy to get to New York City from Europe, and maybe you pass through and then go elsewhere. But New York inherits some level of that demand, and that basically went to zero for majority of 2020 and most of 21. Now, following China being the last country to lift their major restrictions late last year, all borders are reopened and cities benefit the most. And there's a really this is not just all theoretical. There's a really strong correlation between inbound international arrivals and hotel occupancy. It's almost a 90% correlation, which for us is really strong statistically. And so we've seen this, right? As international travel has rebounded, still not fully recovered, but rebounded, occupancies in places like New York and London and Paris, Los Angeles to some degree, Tokyo a little bit slower, but starting to come back, have seen this surge in occupancy, and investors therefore want to be there. And then I think on the investment side, which is really interesting, a lot of these markets, it's very challenging to build in, to develop new hotels. I think that's always been the case. Urban density is a tough place to build. But now with what we've seen from a supply chain perspective and labor cost perspective, it's not only hard to build, it's really expensive. So you have these like very historically unique dynamics where you can buy a hotel for much less expensive than it is to build a new one. Even if you have to renovate, you're still in it for a lot less money. Performance is starting to come back. So again, if you're an investor that has the capital, has access to the capital in some way, for us, we see this as a historic opportunity, in some ways not dissimilar to what it was immediately following the great financial crisis in 08, 09. Historic opportunity to buy into markets that we all believe are forever markets. They've just fallen on some hard times, but they're really starting to come back.
What you're mentioning is really interesting to me. I mean, this is a global report. You spoke about global cities here, and I'd like to talk about a little bit more about some of the international implications of this. One of the other themes that you touch on is event-driven travel. Obviously, the Summer Olympics are coming up in Paris.
Yes.
Taylor Swift's Eras Tour, which we saw the Taylor Swift effect in the U.S., but now she's in visiting. I think it's Japan and Australia. Then she'll be in Europe. So for folks that are listening, in Europe and some of these other countries, how would you what are you seeing or hearing or advice you'd have on how they might effectively prepare for and maximize the benefits of some of these events?
First off, I just think it's wild that we're talking about Taylor Swift. We referenced her and her Eras Tour in our report, and it's funny. I sent it out to the team, and a bunch of people are like, who would have thought 10 years ago we'd be talking about this? But you're totally right, and I got to credit, STR and CoStar for kind of breaking the trend on this, talking about the impact. I don't think anyone in the U.S. was prepared for it. I think all said and done, it's roughly $200 to $300 million just on hotels from a positive revenue impact, and that doesn't include airlines, ancillary businesses, ticket sales, obviously, et cetera. I think now that there is this understanding of what it could and does look like, I think that gives hoteliers in Europe and in Asia Pacific a leg up, right? In many ways, I think you have to look at it not, and this is kind of bizarre to say, but not dissimilar from a Super Bowl or from any large event that you otherwise would see. The Olympics is obviously on a totally different plane, but the way Taylor Swift fans, or Swifties, I guess, the way they travel, the amount they're willing to pay for the concert itself, obviously then there's a amount they're willing to pay for hotels and travel accommodations. So I think hoteliers have to be proactive, and we've already started to see that. I think the impact will be as strong, if not stronger, right? In some of these cities, it's the first time she's ever performing, and obviously has a global following. I think it's really incredible. And then the Olympics, I think is going to be fascinating, right? I mean, obviously we had an Olympics kind of during COVID, and that, I'm not saying it doesn't count. It counts from an athletic perspective, but from a travel perspective, it really doesn't. So this is really our first Olympics, post COVID. Paris already last year, in many ways, generated its highest RevPAR ever. Average rates were sky high. I think for 8 or 9 months of the year, they had average rates in the 400 or 500 euro range, which is 30, 40, 50% higher than ever. And then, of course, you add the Olympics onto that, which is obviously a very unique event. We're expecting all of those factors together to drive significant demand to Europe. And again, it's not just Paris. Obviously, the Olympics start there, but then particularly international travelers, likely will spend 3, 4, 5 days in Paris, London, Rome. You'll probably see an impact to the Mediterranean. You potentially see impact to parts of the Middle East. So I think it's really gearing up to really, really incredible, summer Q3 for Europe, and then really the world overall.
It's exciting. Let's stick with this global perspective, because you've identified markets from India, Turkey, Saudi Arabia, Spain as ones to closely monitor. I'm curious if there's any similar characteristics among these. Obviously, we're looking not just to this year, but beyond. It seems there's potential here. What are you seeing in some of these markets?
Yeah, well, I think India is actually a really interesting one to start. And we've sort of been tracking the opportunity for India for quite some time. Last year when India officially became the most populous country in the world, that sort of set off these, global ramifications. But that wasn't unexpected. I think, most economists predicted that for years. I think what's really interesting about India as it relates to hotels is there hasn't historically been a large enough middle and upper class in India to have sufficient even domestic travel demand. That's changing quite a bit. Obviously there is a growing middle class. There's a huge tech community in India, which has always been there. You're starting to see rising wealth. There's quite a few high net worth individuals in the country, growing at a stronger clip than anywhere else in the world. And I think because of that, you're starting to see the major, U.S. and international based hotel brands moving into the country at record paces. IHG just announced, Intercontinental just announced, I think they're opening 100 new hotels in India this year alone. Marriott said something similar, Hilton, Hyatt, and the others. And so what we see, and this speaks to the other countries you mentioned too, whether it's Spain, the UAE, et cetera, is when these kind of world renowned or world recognized brands move into these countries, that's when they kind of get on the map from an international travel perspective. As much as personally I love staying in independent hotels when I go to Europe or Asia or wherever, the reality is that the average consumer wants to stay at a place that they know, whether that's a Marriott or a Hilton or a Hyatt. And so when those brands go into those destinations, that's when you start to see the recognition, and that's when you start to see the travel. I think the other big thing is, and this really relates to India, relates a little bit to Africa, is airlift. And historically, there hasn't been sufficient, or there hasn't been enough, and that's because the airlines don't see the demand. That's changing. I mean, India Air alone, I think over the last 3 years, has purchased something like 85 planes, which is maybe not sound like a lot, but it's a lot when you think about that. And so that's going to create the capacity and create the opportunity for travel. Then you look at places like Spain, obviously, Barcelona, Madrid, these are forever markets. Madrid's really interesting. Madrid, prior to 5 or 6 years ago, didn't have a whole lot of upper upscale and luxury supply. And in the last 18 to 24 months, that's totally changed. You have the Edition that opened, you have the Mandarin, you have the Blessed Collection, you have all of these really well-known, internationally recognized luxury hotels. And it's being driven by, again, this kind of resurgence in wealth and the desire to travel. And again, it's these brands that we all know, whether it's here in the US or already known in Europe or other parts of the world. And that's really driving this development and driving this growth and demand.
That's really exciting. And I guess one um, another I mean, to change lanes slightly, one of the things that you touch on in the report is sustainability. And I'm curious. I feel like we've been talking about this for a long time, and we may want it, but
Yeah.
on the investment side or kind of the capital side, are there things that you're seeing there that are maybe new or presenting some new opportunities in the years ahead?
Yeah, I mean, I think, candidly, it's been slower than I think many of us would like. Obviously, we all know the impacts to our planet, the impacts to the environment for that come just inherently from travel, whether it's air travel, hotel travel, et cetera. I mean, that's part of the business. Europe, particularly Western Europe, the UK, Germany, has really led the charge as it relates to sustainability and kind of forcing investors to include various sustainability metrics into their underwriting. That hasn't necessarily been the case in other parts of the world. I think in the U.S. it's coming as the SEC is a bit more stringent around regulation, but we just haven't seen investors sort of step up on their own right, sort of have to be forced into it, which is again a bit disappointing. But I think it's coming, and some of the climate related disasters that we've seen here in the U.S. over the last couple of years, I think investors recognize that it's a major issue. In fact, we did our annual hotel investor sentiment survey late last year, and one of the top three challenges that investors face, again globally, is climate related disasters and how do you underwrite that. And so we are starting to see it as this desire. It just hasn't necessarily translated into action. I think the other side of the equation from the consumer side, which is tough, is consumers consistently say that they want to travel more sustainably. Booking.com does a massive survey every year, and each year it gets the percentages higher and higher of the number of consumers that want to. But again, want to and action are totally different things. I think part of it is an onus on the industry. We have to do, as hotels, as travel providers, have to do a better job of communicating to consumers what does it mean that we have sustainability initiatives. I mean, again, simply recycling your towels, like that's all well and good. I'm not taking anything away from it, but that's really not sustainability. So what is it that we're doing on an individualized or collective basis that really instills confidence in consumers that they are maybe not making a difference with their travel, but at least mitigating their impact? And I think this all comes back to kind of broader tourism in general. And so we talk about, one of the main themes we talk about in our report is, this idea, which is not new, but this idea of regenerative tourism. And it's not simply about mitigating your impact. It's actually about leaving a positive impact. And whether that's with the community you're staying in, whether that's the environment, the social impacts. And so to us, that's really where this all leads to. And there are some destinations that have done a really, really good job with this, whether it's Costa Rica. Venice historically has been looked at as this over tourist area, but they're actually pulling back and starting to see some really positive impacts. So we see destinations doing this more and more. And we see this as kind of the future and the opportunity. And this creates a lot more investment, whether it's infrastructure investment, hotel related investment, broader hospitality investment. And so again, I don't think we're definitely not there. It's not 2024 is probably not the year, but hopefully it's kind of the start or the mid part where we see this acceleration.
Whether it's in sustainability or some of the other trends that you're seeing, you mentioned the role of brands. It seems to be a consistent through line here. You talk about new
Yeah.
markets opening up. It's something that you touch on in the research as well. What are you seeing in the world of brands right now?
Yeah, it's fascinating. So my background, just transparency, is with Marriott. I spent a long time with the brand prior to the Starwood acquisition, post Starwood acquisition. So I have a huge affinity for Marriott and also all the other brands. I think we all know that hotel brands are not just places to sleep anymore. They've become sort of synonymous with our broader lifestyle and in many ways all facets of consumerism. And again, this is not bias, this is just fact, but it actually really started with current Marriott brand Westin, at the time part of Starwood. They launched the Heavenly Bed in 1999, which is pretty amazing to me. And they created this whole consumer-based industry around a hotel bed. Part of the research for this report, I learned that they've now generated over $1 billion in consumer sales for that bed.
A
Um,
billion
$1
dollars.
billion. Now, granted, we're on 25 years, give or take, but it's pretty incredible. And I think many people, particularly in the industry, but even those outside, if you say the Heavenly Bed, they can probably tell you that's Westin. And so you think about where we've come as an industry, hotels and hospitality brands are now really ubiquitous across our entire lifestyle. whether that's fragrances, right, that people associate with specific hotels. Again, beds, spa. You're starting to see obviously credit cards, point sharing. Uber has partnerships with a number of hotel brands. Airlines do, and so for us, when we look at it from a consumer perspective, but also an investment perspective, when you're buying into a hotel brand, you're not just buying into that specific hotel or that place to sleep. You're buying into this entire ecosystem. And so when we look at distribution and we look at how consumers are making buying decisions nowadays, there's a lot more than just, oh, this is where I'm staying the night. It's like this personal affinity or kind of value-based affinity that you are buying into. And when you think about it, particularly as you get into the upper upscale and luxury side, you're buying into potentially an ecosystem that goes beyond just hotels, right? You have branded residences, you have yachts, you now have membership clubs. And so we're seeing hotel brands not just source capital for their hotels, but Ritz-Carlton, as an example, has now sourced over $1 billion for its yacht collection from Oaktree. You're seeing the Aman collection, obviously, of their private membership club. They're rolling out a pseudo yacht, and they've sourced billions of dollars at this point from public investment fund out of the Middle East. And you're seeing very similar investments here. So for us, I think just understanding what this means for travelers and what this means for investors, it's a really unique period. And then you're seeing other industries now getting into hotels. Of course, you have fashion brands opening hotels across Europe. So it's sort of this consistent and constant blending and blurring of lines, which I think as a hotel person is fascinating, but as a traveler and as a consumer, I think it's a really interesting time.
What a time to be in hospitality. I'm really excited listening to you, Zach. And what I'll do is I'll link in the show notes. I encourage everyone to check out what Zach and his team have created, the Global Hotel Investment Outlook for 2024. Link in the show notes where you can access that, download that, read more about some of the themes that Zach mentioned. Zach, thank you so much for taking some time to walk through some of these ideas with us today.
Of course. Thanks so much for having me. And just real quick, if I give a shout out to the whole team. So it wasn't just me that did this. Ophelia Marcus, who's here based in the US, Jessica Johns in Europe, and Marina Bracciani, who's based in Asia Pacific. Huge effort. And then, of course, our entire team at JLL Hotels and Hospitality.
Incredible work. Thank you, Zach.